I know you guys have been bullish. You've been risk on pretty much. So you've ridden what now looks to be a 5, maybe 6-month rally in equities. How do you feel now?
Well, we are definitely extended in this rally, but we would say it can continue. Valuation not as attractive anymore as 2 months ago. But look at the equity risk premium, which is still very attractive. I think the Fed has really created an environment and will create an environment going forward where equities can move higher and are attractive, particularly versus other asset classes. So we remain on the risk-on side, but we start to shift slowly into sort of some of the laggards, some of the more cyclical exposures that we want to build up in our asset allocation strategy.
What sectors would those be when you say cyclicals?
Well, I mean, look what Warren Buffett did in Japan. So Japan is deep value, and it has one of the highest exposure to industrial cyclicals, commodities. We bought the first time for the last 6 years a broad-based commodity index a couple of weeks back. We are long gold, and I think the story is not over yet. Particularly, the U.S. dollar can weaken much further from here, and that's creating an environment where you sort of combine negative real interest rates by the Fed. The recovery will continue, and we get data out of Europe and the U.S. later today, but even the one in Asia are confirming that this recovery has not stalled yet. It may be a bit weaker than 1 or 2 months ago, but it can continue, and that's exactly the environment where you want to start to pick up some of the lagging names.
Yeah, Adrian, I thought it was interesting when it comes to within Asia in your equity portfolio, you're looking at places like Singapore and India, where South Asia has really lagged behind. What are you seeing in some of these markets right now to build a case around them?
Yeah, absolutely. I think India is actually already doing quite well. I think you're not just buying necessarily the economy. India has also a big part of IT outsourcing stocks, and they have done extremely well over the last couple of weeks. India is actually, particularly the last 2 or 3 weeks, one of the best performing markets, even slightly ahead of China. Singapore is a different story. Singapore has really lagged. It's still struggling at the moment with low interest rates. It's heavy tilt to financials, of course, real estate. But we do think as this economic recovery will continue, the Fed basically indicated it's allowing to overshoot inflation, that at one point you will start to pick up some of these laggards. We see value there. I think they are, at this point, we would call it undervalued, compared particularly to some of the growth stocks, which may move higher from here, and there's still momentum behind these stocks, and investors are piling into them. But you want to sort of running a barbell strategy at this point where some of these laggard names are actually starting to show up in your portfolio. And probably the next leg, particularly going in 2021, when earnings growth starts to become double-digit for most of the regions, that these names are the ones that are favored.